If you had put $10,000 into Bitcoin back in November of 2022, that investment would have turned into $75,000 just 3 years later. Even after the recent pullback, you'd still be sitting on roughly $45,000. But when we measure that same return relative to gold, the picture looks very different. In gold terms, that $10,000 in Bitcoin would be worth only about $22,000 today. In other words, even though Bitcoin is currently up more than 450% in US dollar terms, it's only up about 120% when measured against gold. This big divergence has been really disappointing for investors expecting another 1,200% outperformance by Bitcoin, similar to the last bull run. To make things worse, Bitcoin relative to gold has now fallen to levels seen back in January of 2021. This means that anyone who chose Bitcoin over gold, despite the higher risk and volatility, has effectively seen no real outperformance in the past 5 years. But all of this underperformance could be about to completely change, based on a major signal we've just gotten from gold, as we'll show you in this video. A quick reminder that our Cyber Monday discount is about to end soon. This is your chance to get access to our entire premium membership for a fraction of the price. You'll get access to our entire trading strategy, along with all of our buy and sell alerts for each trade, where we take you from initiating a position to booking profits and closing the trade. We've had some extremely profitable crypto trades throughout 2024 and 2025 on Bitcoin, Ethereum, Solana, and other altcoins, while keeping our losing trades to single-digit losses. This is how you generate real outperformance in the crypto market. If you're interested, make sure to use the link below for our Cyber Monday offer to join the thousands of traders already subscribed. First, we need to understand the relationship between gold and Bitcoin. Bitcoin has long been viewed as digital gold. It's a modern store of value built on the same principles that have supported gold for centuries. And the core reason behind that comparison comes down to one key driving force known as currency debasement. The currency debasement thesis is simple. When governments take on too much debt, the currency loses value, and investors move towards scarce assets that cannot be printed and are not tied to any one government's balance sheet. This year, concerns around debasement have exploded. Mentions of it have hit record highs, even higher than what we saw in 2020 after the pandemic hit and the Federal Reserve printed more than $3 trillion in just 3 months to stabilize the system. Both gold and Bitcoin are deeply tied to this debasement theme, something that successful macro investors like Ray Dalio and Stanley Druckenmiller are calling the debasement trade. Gold has served that role for more than 5,000 years. Its annual supply grows at only 1.7%. It's physically durable, and it's accepted worldwide. That's why central banks around the world have been aggressively buying gold as a way to diversify. Bitcoin, though only 16 years old, was built on the same principles as gold. Its total supply is capped at 21 million coins, with an inflation rate of 0.8% that's cut in half every 4 years through the halving cycle. Bitcoin is also digitally durable and has been seeing increased institutional and sovereign adoption in recent years. So gold's scarcity is geological, while Bitcoin's is algorithmic, but both are being driven by the same underlying concern, which is the gradual erosion of trust in government-issued money. Since 2023, gold has risen by about 150%. During this same period, the US government has added more than $7 trillion in new debt, pushing total federal debt past $38 trillion. Just the interest cost on that debt has now reached 3% of total US GDP. The Congressional Budget Office, the agency responsible for producing the government's long-term budget outlook, originally projected this figure to reach 5% by 2050. But after Trump's One Big Beautiful Bill, they've revised that estimate closer to 7%, so more than double from where it stands today. This is a serious problem for the long-term sustainability of the US government's balance sheet and the US dollar, something which gold has already begun to price in. But naturally, when gold rallies this aggressively, investors start rotating a portion of those gains into assets further up the risk curve that still stand to benefit from the same currency debasement theme. This is where assets like silver and Bitcoin come in, and we're already starting to see some of that rotation take place right now. This chart shows the performance of gold relative to silver. When this line rises, gold is outperforming silver, and when it falls, it means silver is outperforming gold, which typically signals capital rotating out of gold and moving further out on the risk curve. In just the past 10 days, silver has outperformed gold by over 10%. We've only seen such a move 5 times going back to 2013. If we put Bitcoin's price on top, we can see that all 5 of these instances corresponded to incredible buying opportunities. In each case, Bitcoin moved sharply higher over the following 6 to 12 months. In fact, if we replace Bitcoin's price with the Bitcoin to gold ratio, the pattern becomes even clearer. Every one of these signals also appeared right before Bitcoin began outperforming gold as a result of capital rotation. This is likely why we're already seeing heavy on-chain accumulation from large Bitcoin players today. This chart shows the number of Bitcoin tokens being pulled off exchanges and moved into external wallets. During the recent correction, more than 375,000 Bitcoin have been withdrawn, equating to almost 2% of Bitcoin's entire supply. When investors move their tokens off exchanges, it signals that they're buying with the intention of holding, not selling, in the near term. The only other times we've seen withdrawals of similar magnitude were in October 2022, March 2020, and November 2017. If we put Bitcoin's price on top, we see that each of those marked major buying opportunities, including 2017, which preceded a 250% melt-up in just 1 month. This, of course, doesn't mean we can't get more short-term volatility, like we saw in October of 2022, but it does suggest that some capital is beginning to rotate out of gold and into Bitcoin, making Bitcoin an attractive investment opportunity right now. This is also something we'll be looking to trade with our members at Bravo's Research once Bitcoin's momentum turns more constructive. So if you don't want to miss it, make sure to take advantage of our Cyber Monday deal. There's only a few hours remaining. We've been taking our clients step by step through this crypto bull run, sharing our trade setups and trading strategy through 3 weekly premium videos. You can see all of our closed crypto trades for free on our homepage. If you're interested, don't miss this deal using the link in the description below.